Hi there and welcome back to See Today Business. Now, over 400 stocks closed lower on the Indonesian Stock Exchange on Tuesday, and in the ending of the first session today, the IDX Composite traded not far from yesterday's close. Now, the exchange's director of listings said that the heightened tensions between Iran and Israel are one of the factors behind the IDX's recent bearish movement. The IDX Composite fell for more than 2% to the level of 7,066 during the opening of trading session on Tuesday yesterday. Although it rebounded at the closing, the IDX still fell by 1.68% at the end of the day yesterday. Now, the Indonesian stock composite managed to claw back earlier this morning, exceeding 7,200, but it fell continuously in the next 3 hours or so of trading to end the first session only 0.05% higher. Now, the Indonesian Stock Exchange's director of listing admitted that geopolitical tensions, namely the heightened tensions between Iran and Israel, is having an impact on Indonesian stocks.
Pasar akan bergerak sendiri sesuai dengan kondisi yang ada, teman-teman sekalian. Kan pasarnya bergerak dinamis. Saya tidak bisa menyatakan apakah ini mempengaruhi. Namun hal yang umum yang terjadi adalah faktor geopolitical tension itu akan berpengaruh tentunya terhadap pergerakan indeks. Pasar memang bergerak dinamis dari masa ke masa.
And to delve more into the topic, today joining me is economist at the Institute for Economic and Social Research from University of Indonesia, Teuku Riefky. Mas Riefky, thank you so much for coming to our studios.
Thank you, Mas Chris.
Talk about this.
Pleasure to be here.
Thank you. Now, of course, these are very uncertain times. As you heard just now, an official from the IDX is saying that geopolitical factors are having an impact. What is your view on this? How much is the Iran and Israel tensions affecting macroeconomic conditions and also the stock market here in Indonesia?
Okay, I think it's very difficult to actually separate what's been going on in the Middle East with other global event. For example, the Fed latest statement and stance also play a factor in how macroeconomic in Indonesia affected. But to say the least, that this is a geopolitical tension, and this is to some extent not a new thing that we've been experiencing in the past few years. We've seen the geopolitical tension broke out in the Russia and Ukraine war, and also the Middle East geopolitical tension since last year. And it all has a similar characteristic in which the uncertainty of global economy is heightened. And when that happens, usually the first thing is that investors tend to move their portfolio outside of emerging economies. And what we've seen so far is the repetition of that pattern, in which that there is a capital flow outside of Indonesian financial market. And there are other factors that could also contribute in the current escalation. First of all, that this current tension between Iran and Israel is still escalating and developing. So it can be, the situation can be changed on a daily basis or even on an hourly basis. But there are some expectation or anticipation of the worst case scenario in which that could impact the global trade, the oil prices, and other factors. But as of now, we've seen that the first round of impact in which the capital outflow. But we have to be ready to anticipate other repercussions that we have seen in the previous pattern.
How significant is that capital outflow? Because as we know, the IDX dropped yesterday and this morning. It's really struggling to rebound. How significant is that capital outflow affecting the stock market and even the rupiah?
Yeah, I think there are two major factors that comes into play when we're talking about the current state of Indonesian financial market. First is the main theme of the last few days is the Iran-Israel tension. But we cannot really separate that effect from what the Fed has been saying, or the statement that they've been released just recently. And those two impact are, in terms of financial market, creating the similar effect in which it creates a flow of capital out from emerging markets. And this is what we've been seeing in the past few days. And I think the combination of these two factors would give enormous pressure in terms of currency, in terms of financial market, and also in terms of bond market. And I think it's getting more stabilized in the past few hours, but the panic is still out there. And the escalation, we haven't seen any concrete escalation on the Iran-Israel front.
Yeah.
But until that happens, we can see that the panic tend to moderate for a while.
Right. So, I mean, if things kind of stay the way they are, with Israel not knowing yet what to do next, I guess the question is, how long will this kind of uncertain or perhaps even negative sentiment last in the Indonesian market?
I think we have to see in which situation or scenario that we are comfortable considering it as the new normal. Back in 2022, we've seen the broke of Russia and Ukraine war.
Yeah.
And we were in a very difficult time deciding what would be the certainty point after that war broke out. But after a while, we've kind of reached a new equilibrium where the war goes on, but we can manage or we can circumvent the global impact to the domestic economy. And that's because the kind of escalation of the war kind of stagnate, in which there is no more significant escalation, there are no more involvement of other countries in the geopolitical aspect. But this is a very premature or early stage of the Iran-Israel war. Anything could happen. And that really depends on the kind of escalation that they would have. Some political analysts suggest that the escalation would be limited, considering several factors, such as the election year in the US, in which that probably the United States wouldn't make any bold move in the election year. So some of the analysts suggest that the tit for tat, or the kind of the escalation that would happen, would be minimized. Okay. And if we take that as the working assumption, then we can see that probably in the next few weeks, we could see a more stabilization on the currency front and financial market front. As currently Bank Indonesia is also actively intervening, and the central government also preparing for the worst case scenario, for example, the fiscal potential implication in terms of oil prices and subsidy and all. But after all the dust settled, considering no significant escalation, I think this wouldn't go too prolonged in the future.
Okay. Great. So just very quickly, I mean, what sectors, especially in the Indonesian stock market, might kind of be impacted in the next few days or weeks to come?
I think the first impact that's kind of obvious is the escalation on the energy prices,
right.
Specifically on oil prices. Many analysts suggest that there is a potential that oil prices could reach $100 and above. But we haven't seen any progress towards that statement or that analysis in the past few days. And if we're looking at the latest data, the oil price actually kind of stabilizing.
Yeah.
So, but with that sentiment is still out there that oil price could increase, then we are seeing that the energy sector could be the main beneficiary of this current escalation. For example, in oil or also coal companies or sector could be the main gainers of these issues. But other sectors that might bear the negative implication could be from the consumer goods.
Right.
The implication of the war and rising energy prices is the rising inflation. And that could erode the purchasing power of the population. And that might affect the consumer goods production and performance down the road.
Okay. So consumer goods could sort of be negatively impacted. Energy stocks companies might benefit. Speaking of oil, we do have a soundbite that we want to run where Airlangga Hartarto admitted that the rising tensions are having an impact on oil prices. Let's take a listen to what he said.
Dari sisi perekonomian, tentu kita melihat terjadi lonjakan harga minyak akibat serangan Israel ke kedutaan Iran di Damaskus, dan juga terhadap retaliasi yang dilakukan oleh Iran.
Right, so we heard there Indonesian coordinating minister of economic affairs did admit that it is impacting oil prices. The question is, because right now it is relatively stable at $85 and $90 a barrel, what would it take for it to go to $100 a barrel? And how could that impact, the stock market as well?
Yeah. I think that would require a series or a very drastic measures taken by any sides conflicting on Middle East. That currently we consider as the worst case scenario, as we don't think the probability of that happening is quite high. But if that happens, then if the oil price reach $100 per barrel, then we could see some major transmission that could impact the domestic economy.
Yeah.
First of all, the import price of oil, which could impact the cost of production when they need energy, and that could impact the general inflation. That could erode the purchasing power.
Right.
And the next one would be the impact on other energy sectors. This is kind of a blessing in disguise in terms of energy, because we are the oil importing country, but we're also coal and CPO exporting countries. But usually they tend to move together. If there is a significant rise in oil prices, usually the producer and consumer of energy around the globe will seek an alternative, and that would drive the demand for coal and CPO as well. So that would also drove up our export and probably our tax revenue, and that could create some fiscal space for the government to actually manage the fiscal burden from the oil subsidies, as we have seen back in 2022.
Right.
But on the magnitude, I don't think that would escalate to the level that we've seen in 2022 like before.
Okay, so not as bad. It could be after the Russia-Ukraine war began. So, another issue or another factor of concern is the Indonesian rupiah. As we know, it broke above 16,400, 16,200. It was just now. How do you see the current situation affecting the rupiah at the moment, and how does it relate to stocks?
Okay, I think the first impact would be coming from uncertainty. Any sources of uncertainty, be it geopolitical tension, protectionism, or even domestic political instability, could heighten the uncertainty.
Yeah.
And when that happens, usually the investor would move to safe haven asset. And the majority of safe haven asset would be US dollar and US Treasury.
Yeah.
And you could also include gold in that as well. But when that happens, then currency of rupiah would be depreciating, as we have seen in the past few days. And what needs to be done is that Bank Indonesia doesn't need to actually strengthen the rupiah, but needs to make it more stable. At least. That's the objective. But with the current pressure on the rupiah, I think the issue here is that it will impact most of the importing sectors and also the exporting sectors, because the uncertainty make them couldn't really plan the future and make concrete business projection.
Yeah.
And also the manufacturing industry.
Yeah.
Manufacturing industry could be impacted quite substantially, because when we're looking at our import profile, 90% or around 90% of our import profile is actually input material and capital goods, which directly link to the production activity. So I think if we are having a very volatile rupiah, then that would impact the performance of the manufacturing industry and the respective stocks
as well. Okay, great. But as you mentioned earlier, there is hope that this negative sentiment could maybe just be a short term. Mas Teuku Riefky, economist at the Institute for Economic and Social Research from University of Indonesia. Thank you so much for coming to See Today Business Studios and giving us your insights.
Thank you, Mas Chris. Nice to meet you.
All right, we're going to go for a break. When we return, we'll have a more in-depth recap from the Indonesian stock market you don't want to miss, so stay tuned.